The troubles for India's crypto industry seem to be never ending. On February 1st, in the Union Budget, the government decided to impose a 30% tax on income from cryptocurrencies starting from the new financial year and 1% TDS on all crypto transactions starting July 1st. The move, in a way, quelled the uncertainty surrounding the fate of cryptocurrencies in India and suggested that it may not be banned as feared earlier. But by then, cryptocurrencies had already entered the bear market territory. The crash was worsened by the recent collapse of algorithmic stablecoin Terra USD. Now, the oldest and the largest cryptocurrency, Bitcoin, is trading at its lowest level in 18 months after falling 70% from its record highs in November 2021. Globally, crypto exchanges are trimming their costs and laying off hundreds of employees as trading volumes take a major hit. Amid these trying times, Indian exchanges have a reason to cheer. While the government disregarded the demand to lower the TDS rate to 0.01% or 0.05%, the Central Board of Direct Taxes on Wednesday came out with long-awaited clarifications over the applicability of the TDS provisions. It addresses some of the concerns raised by the industry and helps exchanges and traders navigate the burdensome TDS provisions. The 1% TDS is applicable on payments towards cryptocurrencies beyond 10,000 rupees in a financial year or 50,000 rupees a year for specified persons, which includes individuals and HUFs who are required to get their accounts audited.
Where they've also clarified how we are also going to do crypto to crypto transactions, because that was the biggest point of concern. Although it's kind of burdensome for the exchanges to do it, because it's the exchange's liability to execute the whole transactions and convert the whole TDS into INR, and then as well as file quarterly reports, which is kind of good for the whole user experience. Probably it's a weak work for an exchange to set it up. And I think exchanges will actually develop the capability to file the taxations, file the reports and everything on the behalf of users. And this will probably decrease the volumes further, as I'm expecting in the shorter term. But what I see is that people will be mostly holding. Probably what I see is that the industry will actually launch more like long-term investor-friendly products. And I think they haven't clarified on the derivatives, like what are we going to do on derivatives, what kind of TDS is going to be deducted and how it's going to be filed, because obviously you have leverage trading, margin trading.
In a peer-to-peer transaction, the buyer is required to deduct the tax before paying the consideration. In case the transaction is taking place through an exchange, the exchange can deduct the TDS. Exchanges are required to furnish a quarterly statement for all such transactions. CBDT also removed doubts on how crypto-to-crypto trades are treated for TDS. In such cases, the exchange will have to deduct 1% TDS on both the assets in the pair. The tax deducted in kind must be immediately converted into either Bitcoin, Ethereum, or stable coins, namely Tether and USD coin. This accumulated balance should then be converted to Indian rupees at midnight every day. The trail of transactions for every TDS deduction on crypto-to-crypto trades must be maintained by the exchange.
Overall, it's a good clarification from the government. This will definitely help exchanges and other participants in the crypto ecosystem to implement the TDS provisions and operate in a legally compliant manner. Having said that, there are certain issues that are still unresolved. So one of the first issues is on whether this applies expressly to foreign exchanges or not. Secondly, there are certain products by some of the exchanges which may or may not be covered. There is a little bit of gray area, for example, on P2P transfers over a platform. Separately, one of the issues that has been raised even when the provisions were legislated were with respect to how they apply to decentralized exchanges or DEXs. Enforcement against DEXs is still a big issue. Who do you go after in case of non-compliance is an open question. Of course, the clarifications do not address these aspects because I think they were just intended to address questions raised by several exchanges, primarily domestic exchanges.
Compliance requirements going up for exchanges should provide comfort to banks. They have in many instances denied services to them. BITE's Amanjot Malhotra says it is surprising that banks are still not comfortable doing business with crypto companies despite a taxation regime setting in and regulations evolving for the asset class. He says one will find compliance to be very strong with crypto exchanges in India. It is hoped that the latest clarifications on TDS and the soon to be issued FAQs on crypto taxation will bring a sense of stability to traders and domestic exchanges in a turbulent year.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
क्या हाल?
मत पूछ यार, फिर से स्टॉक्स में फंस गया।
तो स्टॉक्स के साथ बॉन्ड्स, इंश्योरेंस, गोल्ड में बैलेंस कर।
इसमें बहुत तामझाम है।
तुझे 5 पैसा नहीं पता?
अब तो सबको पता है 5 पैसा है ऑल इन वन अकाउंट। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है Investing made easy and rewarding with 5 Paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.